All right, we made it through the week so far. It's Thursday, and we'll take a review. Yesterday's video talked about PENN, Uber, GE, Skyworks, Fortinet. Of course, we were looking at WULF from earlier last week and what to do there. So let's take a look at what the overall market, besides the excitement that we had from earnings in Broadcom, which was up sharply, Oracle, a lot of these software and, again, semiconductors are just really holding up this market along with Apple. And then again, Thursday after the bell, in what I think is a surprise, Adobe up 14%. The media is talking a lot about Tesla and the vote there for Elon's pay package. All that's good stuff, and it makes for fun cocktail conversation. But the overall condition of the market is a little spooky in the sense that today, with all of this hoopla of a new high in the stock market, the advanced decline weakened again. This is the Qs. This is the cumulative advanced decline. As you can see, 30 stocks were strong today, 70 were weak. You have a new low in the NASDAQ composite, almost 2-to-1. The Dow Jones Industrial Average, not a big deal. You can't get any more even, Steven, than 15 positive, 15 negative in an index that has 30 stocks. It's the S&P 500, again, banks, transportation, something maybe a lot of people don't want to talk about or address how good are things really. Until we get actually this yellow line cross back over that blue line, it's still in a weakening trend of breadth, and that's not very positive. This 10-day average is the average true range is a 10-day period. It generally is not a very good sign for market conditions when the volatility rises. Now, I'm not talking about the VIX, which is a representation of people buying SPY puts. I'm talking about the condition of the market with wild trading ranges. That makes people tend to get a little bit nervous. And when you get increased volatility of the ranges combined with breadth, something's going to have to change. Now, some people might be looking at this gap that we had as a breakout gap, but breakout gaps usually come after, an old resistance, a trend line, something. This, I think, is just a common gap. Could be also something to consider on the bearish side of things, an exhaustion gap. So we will not know for another at least 2 more sessions, Friday and then into Monday. So we need at least a 2 more sessions to see if that actually gap can be filled by a lower open gap. I'm not thinking it's going to be that sinister, but unless the more stocks go up than are in this current environment, the negative advanced decline relative to the positive price action is a divergence, something that if you may be hearing people talk about it, that's what they might be. That should be what they're referring to. Let's leave it at that. All right, real quickly, what do we got? GEHC. This was what we talked about yesterday. Today, up a buck from the open lower, traded higher. So we gave that yesterday. SWKS, again, a trade that we gave out several days ago, up again another 4%. This is getting a little lofty. It's filled the gap completely. If you're not out of this, at least half. Get out of half and raise your stop underneath today's low. Next, yesterday we pointed out about Whirlpool. Open lower, traded lower, inside day, nothing happened. Inside meaning today's range was inside yesterday's range. Nothing happened. As long as that volume looks good, it has the opportunity of recovering to the upside. PENN National in the gaming stocks. It's one I gave yesterday. That's not a big deal. It was up 2.5%. It's a $19. Yesterday was an $18.50 stock, so it rallied. It made nice momentum. And if you're looking at stocks to trade, it's nice that if you're bullish that they go up. Now, we never know by how much. Some are great, like Skyworks, and some are like PENN. So that's what we covered yesterday. By the way, Fortinet, FTNT, Fortinet may, which I'm going to warn you now. So Friday, make sure if you're watching Fortinet, could generate a end of week buy signal if it closes greater than the high from last week, which was 60.14. We're at 60.23, right at the cusp of that, what would be considered an algorithmic generated buy signal. So it's kind of a coincidence that it's just hanging out near that high. It's not really tearing off And quite frankly, I don't know if it will, because volume structure is just not there. This is that momentum volume indicator we created. Some of you might be using on balance volume, and as you can see, I mean, it's doing okay, but it's not lighting the sky up with a lot of new fresh buying. All right, what do I got for Friday? Well, one of the older trades that we put out last week in the crypto world was WULF, or TeraWulf. And I did recommend to get out of a third of this stock. And then today, again, huge volume, opens lower, trades higher today. So this is a positive that there's still interest, that people are buying the dips in there and did not want to come back and fill that gap. If you are still in this trade, and from our video recommendation, or we talked about this a week ago, minimum, you want to kind of protect what you got in this trade. I really don't know if it's, in this environment, this stock could be at $10 in 2 days. There was a company called Beamer Technologies, BMR is a symbol. And I cite this as this was not a Reddit Wall Street bet trade. This was a stock that opened higher out of nowhere. It's an Israeli company. This is the second time in a year and a half it's had this kind of a crazy type of move. Last year, it did this crazy move right there. It went from like literally $1 to $8. But this year, we were a part of this trade, stayed with it for a long time, and out of nowhere, it just gapped higher. And we trailed our stop. I actually got stopped out around $14. And as soon as it went up to like 18, went down, stopped me out at 14. And it proceeded to go up to, and that's not a misprint, 35. At the end of the day, it came all the way back down to 966. That's really, you can go back and look at that on an intra-week basis. So there are some times that thin market conditions can cause things to go anywhere. And so with WULF, it's one of those things. If you're making money, take something off the table and use a stop. All right. There's a trade INTU generating a nice buy. Weekly has a nice little pattern in here. Tomorrow, it's a very expensive stock, $600, $594. Gap upside the market. May want to look at some call spreads in there, probably for the July expiration. My guess, we need to watch for a weekly, and it would take maybe 3-4 weeks for an upside move. Maybe I'll follow up with that kind of trade over the weekend. One wall of worry, Amazon. Amazon generated a daily sell signal, bucking the trend of the MAGA 8 names. So maybe this is getting a little, there's just like a triple top up in here. One thing I would warn about Amazon, the momentum of volume has been weakening, and we're just seeing like sell signals. The market kind of negates them. It's in this wild trading range. This little pattern here, if we actually close and make a newer low and close below the open of this week, that leaves us with another long shadow on weakening volume structure. It does open the door for lower prices in the next following week. So you want to watch for Amazon. My guess is maybe there's some players banking that the stock's going to come back to around 175 print. That's $8 from here. Maybe you can structure a trade for the next 2 weeks, 10 days out, that would target a move back to retrace into at least the 175. So we have some walls of worries, but the walls of worries are something that I would have to say needs to be paid attention to more closely now, because one of the interesting aspects, those small caps should have gone up. It didn't. It's now trading multiple days underneath a falling or rolling over MA. I'll be watchful of that tomorrow. Breadth is broken down, not too positive. And this advanced decline right here doesn't look positive. So this might be the time you want to take a little bit of small protection. My guess is the gap at 536 or so, 537, gets filled. And then in the next week, there's really nothing that we have looking forward into next week to propel this market up or down any which way. For example, we got Accenture as the big earnings, and maybe European CPI and PPI. Other than that, it's really it's Juneteenth. Wednesday's a holiday, so I mean, maybe one could argue that people will take some money off the table between now and next week at into option expiration. That's about the best that I could surmise. But this weakening advanced decline, it's not a positive sign. Something's going wrong. There's a disconnect, and it'll resolve itself by either prices pulling back down or more stocks going back up. One of the two things have to happen, and the story will continue, and we'll follow up with you. Hope you enjoyed tonight's video. Remember, if you like what you see and you want me to do more of these, at least provide you with what my scans are showing at the end of the day, whether it's buys or sells, just give me a like. And also you can always subscribe and you'll get these alerts updated as we do the videos. And it can only get better in time. With that said, have a great evening. Thanks a lot. And I hope you enjoyed this video.